Hello. Today is Monday, January 27, 2025, and I am Jason Shapiro with thecrowdedmarketreport.com. Let's see if we can do a little bit of course, deep seek into what the markets did today. And clearly, we woke up over the weekend, this whole deep seek thing came in. And I guess the general idea here, very basic, which it has to be for a guy like me, is that it brings down the cost of AI. I think that's the general idea. And if it's going to bring down the cost of AI, then the people that are selling AI are going to get less money for it. Okay? And those stocks went down today, the sellers of AI. Whereas the people that are supposedly going to benefit from this AI by buying it, putting it to work, and becoming the most, efficient organizations that are going to save the world, the industrial companies, should benefit from that. And that's exactly, quite frankly, what happened today. The Nasdaq, which is obviously heavily weighted into these AI givers, went down quite a bit. And the Dow, which is more industrial stuff and all that, went up on the day and actually closed on the highs. So the idea is you take your money out of the people that are providing AI and you put your money into the people that are going to benefit from AI, because they just became a hell of a lot cheaper, apparently, for them to benefit from that. I think that's pretty simple, quite frankly. If we really get into it, the Nasdaq was going down all night on the back of this news, and then just had this waterfall into about 6 a.m. And if you were inclined to try and be buying the Nasdaq, thinking that this is just overhyped, bearish nonsense, I think it could be long versus that low, because that was a panic low. If we were to go through that panic low, I would be very careful about being long. But I think that's the level, The S&P, in the meantime, this is the market open right here. So anybody who sold the S&P, really, anytime after, whatever time this is, midnight, essentially, lost money today. The breadth expanded today, and everybody was so angry before all the last year or two about how breadth was so weak. It was all these AI stocks and everything else was crap. Well, they should be happy. This is what should happen. You really want the market to be healthy, theoretically, that's what's supposed to happen. We're supposed to broaden out. The people benefiting from the technology their stocks should start to go up to reflect the fact that they are going to benefit from the technology. And that's kind of what happened today. I don't know that it was anything really more than that. And I don't know that it's anything but healthy, quite frankly. Do I think that was it? Is it all over? I don't really think so. Could it last a while? Sure. But, these people I've never seen these people that have been bearish NVIDIA and bearish AI and bearish, were just beyond themselves today. I don't think they're going to get rewarded. They can't be short this stuff anymore anyway, but I really don't think that they're going to get rewarded, personally. On the other hand, we did say, and I was talking last week a little bit about the fact, and in the newsletter this weekend, that, it did start to feel last week a little bit like there could never be downside again, because Donald Trump and the new government is just pushing growth, pushing investment. And so how could everything ever go down again? There's never going to be a recession now, because they're just going to keep pushing the economy. So how could anything ever go down? And on the same note, Bitcoin. How could Bitcoin ever go down when all they're doing is pushing it, right? And Bitcoin, quite frankly, it did go down a lot. It went all the way down to 98 level. But it came back like it always does, 102. Not terrible. It's really gone nowhere for quite a while. And that is to be somewhat expected after the run that it had, and after the adjustment that we saw in positioning, where they were super short pre-run, and then they got super long post-run, and now they're kind of like a little bit neutral. But, the position adjusted. People went from short to long. It went up. Now they're long. It doesn't have as much juice to go up now. I don't think that's That's, you know, the biggest thing, surprise in the world, quite frankly. And everything else, you know, kind of went down. But certainly anything related to this AI build and the energy that has to do with the AI build, you know, natural gas went down a lot. A lot of these nuclear companies went down a lot. Copper went down a lot. You know, all these things in this AI build went down. As if it's like never going to happen again. It's still going to happen. Let's not fool ourselves. And bonds went up a lot. Why? Well, you could argue because it was a flight to safety as the stock market was getting crushed. You could also argue that things just got less expensive, which means less inflation, which means good for bonds. And again, that, as we spoke about last week, is probably the most contrarian idea out there. Less inflation. You know, I don't think there's a lot of people that can believe that the Trump administration can, me included, but can pull off this growth miracle without there being some inflation. The cover of Barron's this week mentioned it straight up. So if there's now less inflation, particularly in the AI space, which then follows through into the energy space, into everything, well, then bonds go up. And that's what they did. And the dollar did nothing, you know. I had an interesting move in the dollar in the middle of the night. You know, the dollar was kind of up. This is the Swiss franc. This is the Swiss franc going down. The dollar was up, and then all of a sudden, everybody decided, hey, you know, Swiss franc is the flight to safety, so let's get in, right? And then, you know, they lost half of that during the day. But we do know, of course, that the positioning in Swiss franc is pretty damn crowded short here. So it can easily squeeze like that, and that's what it did. And with that went the euro as well. As that happened, you know, the euro was having a pretty bad night as stocks were going down and risk was going down. And then that Swiss franc thing happened and the euro went with it and came back down with it. The British pound, which is the only position that I have on now, was similar. You know, it was coming off, squeezed up with the Swiss, led by the Swiss franc, and then came off with the swing, but did a lot better on the upside. And the reason that I am long British pound is because that is what my data is showing me. Positioning is the shortest. So that's why I am in that. And I believe that that's why it ended up being the strongest and holding up the best when it sold off and came back the best. That's what I believe. So that's really, you know, what went on today. You know, I don't see any big surprise. I don't see any big crash. I mean, the S&P was down, what, 80 something points, 81 points. I mean, how many times have we had the S&P go down 81 points in the last, you know, 2 years? I mean, it doesn't even show up. If, you know, it does to the tail, but to the close, from here to here, we had worse things just recently. Much worse here, much worse here, worse here. I mean, it was a down day on what was seen as end of world news. I don't buy it. I think there's new highs in the offing coming. Again, might not be tomorrow, might not even be this week. Maybe we got to take some time here. I don't know. But the more they hate it, the more the bears get to sell, the more they short it, the better the chance that it's going to go up. It's great that this happened on Monday because on Tuesday, the COT data comes out on Friday, but as of the Tuesday close. So we'll get a good feel for this, right? Did they buy the dip or did they sell the dip? And then we'll be able to get a better idea for where positioning is. Right now, they're pretty neutral stocks. So let's see where they did on this kind of move, if anything, truthfully. But anywho, those are my thoughts today. I hope that helps. Please like the video. If you like it, please check us out. Crowded Market Report. We got a free Substack. We got YouTube. We're on Twitter. We got a newsletter. We got a web page. All fun stuff. Okay? And we will talk to you again tomorrow. Hope everybody did okay today. And we'll talk to you soon. Thanks.